Hey everyone, Tony Meier here, and today I'm joined by Saul Bailey, mortgage advisor with Rate Mortgage. He's my trusted lending partner. Saul has over 25 years experience helping homeowners navigate financing, including complex situations like the one we'll discuss today. We're diving into a hot topic for current homeowners. How can you buy your next home before you've sold your current one? Saul recently told me about a new program that helps homeowners in this position. But first, Saul, why don't you tell us a little bit about yourself?
Oh, sure. Thank you, Tony. Again, my name is Saul, mortgage advisor, and been helping homeowners and home buyers in Washington State for a couple decades. And I really specialize in not only putting the best overall loan program in place for somebody's immediate needs, but also integrating that into their larger and longer overall financial goals and plans. And so, this is a topic today that we're talking about. Buying before selling, it's a really common scenario that we see. And it can feel like a catch-22 and also very overwhelming to a homeowner. So today I'm going to share a solution that lets many homeowners move forward confidently without having to sell that departing home first.
So let's talk about the problem first. Many sellers don't want to sell their home until they've secured their next home, trying to avoid two moves and just knowing the certainty of where they're going. However, in looking at the MLS today, only 2% of the current pending sales on the Eastside show contingent on the sale of another property. Those looking to move to another home have very few sellers willing to cooperate with a contingent sale, and the ones that will are typically overpriced or in poor condition. For sellers to open themselves up to all available inventory, they've got to consider buying before selling. Why is this a hurdle for so many sellers, Saul?
Yeah, there are typically three barriers to entry that I encounter. And the first one you kind of hit on right there, and that is market conditions generally don't favor contingent offers. And you've also got bridge loan or cash offer style options out there, but they can be so restrictive and incredibly costly. And so, owners also fear not finding a home in time or having to move more than once, particularly if they have kids or pets or, lots of goods, whatever the case might be. So that's typically one issue that we see. The other one is an income restriction where somebody's income just can't support from an underwriting position the new home, the departing home, the car loans, student loans, whatever there may be there. So a debt to income ratio challenge. Yep, exactly. And then, finally, it's, with the massive increase in home equity and home values that many of our clients have, the down payment funds for that next home are tied up in the equity on the departing home in many times. So those are typically the three main issues or challenges that we run into.
I know you got a solution, so let's talk about it. Rates Mortgage new buy before you sell portfolio loan. How does it work, and how can it help our clients broaden their choices in the market, Saul?
Sure. Yeah, the buy before you sell program, very simple title, very simple process. So there's
On point.
yeah, absolutely. And really there's about three different requirements that we're going to look at. And the first is we're going to want to verify by way of an appraisal that a homeowner has a 20% equity position in that departing home. So we've got to meet that. We also want a letter of intent from the homeowner and the seller that they do intend to sell the home within 90 days, or at least list it within 90 days of buying the new home. And then we're also going to want to see some additional reserves. So think of reserves as your rainy day fund of sorts. So if your mortgage payment is $3,000 a month, we're typically going to want to see, on average, 12 months of mortgage payments somewhere set aside in the form of reserves. And that can be met with a retirement account. You don't have to tap those funds. We just show that you have that money available. So assuming you can meet those three requirements, what we will do is we will omit the departing resident's mortgage payment from your debt to income ratios when you're qualifying. And so that is typically one of the major hurdles that we just spoke about. So by omitting that debt to income or that mortgage payment, that typically helps folks qualify right then and there. Yeah, taking this a step further, we've got the option of setting up a home equity line of credit on that departing residence And that helps us to accomplish that potential hurdle of having the equity and the down payment in that departing home tied up. So we would help strategize and put together that home equity line of credit to be able to access those funds for the down payment. And we want to do it strategically to, again, remember, keep that 20% equity position in the departing home when we're setting up that home equity line of credit. So just a fantastic program. As you can see, it's pretty straightforward and simple. We want to make sure that we make those numbers work as we're getting it structured and put together. Now, this is a bridge style type product without the complexities, without the added timelines needed, and without the higher costs of that bridge loan that you typically hear about.
That's great. Bridge loans can be a challenge, that's for sure. So let's say our client bought their home in 2020. On average, the median price on the east side has gone up about 70% since then. Our client may not have a lot of cash resources, but they've got a ton of equity to tap into with a HELOC. What's the typical HELOC timeframe? Are we talking 2 weeks or 2 months before they can get started in this process?
Oh, sure. Yeah. So as far as setting up a home equity line of credit, it can typically take anywhere from 2 to 4 weeks from start to finish. And so that's a really good point is, let's have a conversation early if you're starting the process to get your departing home ready to sell, or you're starting to look at homes, even just casually. I think it's a prudent move to put that home equity line of credit in place early, because you certainly don't want to go out, find your dream home, and then determine, oh gosh, I don't have that home equity line of credit set up to be able to close in time on this new home. So typically 2 to 4 weeks is what you should plan for to get that put in place.
Well, Saul, that's just one of those many reasons we tell our clients who wish to be buyers to get in conversation with you in the beginning of this process, so they know what options they've got and don't make assumptions of the process based upon previous experiences or that of friends. Hear it straight from the horse's mouth, as they say, or the expert's mouth in this case.
Yeah.
So what are the biggest advantages for homeowners in this process, Saul?
Yeah. Number one, first and foremost, the ability to make a non-contingent offer. You're going to present yourself as a much stronger competitor, much stronger buyer in a very competitive marketplace. So that's the number one thing. Number two is just having more time and flexibility to find the right home. So you're not under the gun, you're not rushed, you're not making that transition where you've sold your departing home and now you need to find a new place to live while you're cramped in a short-term rental or something like that. And then, finally is just imagine if you're able to purchase your next home, comfortably move out of your departing home, get settled in, you're over here, and now you've got a chance to stage and get that older home or that departing home sold for a much better price after moving out. And I think you can probably touch on that too, and the reality of that.
Absolutely. As you know, you've helped a few of our clients recently do this, and for them to, one, go out and find the house that they really love, make that move, make that their thought priority, then get themselves moved, and then deal with their home. Once it's vacant, they can see all its flaws, address those flaws quite easily, not having construction inside the house, prepare it for staging, and get it on the market with a very easy showing process because it's not disrupting their life. In addition, at the end of the day, that ease and that proper preparation has helped our clients see top dollar, market prices for their home. So it's absolutely a win for them.
That's right. Absolutely. And, the other thing I want to point out and just really reiterate on this particular program is the costs on this particular program versus, say, like a bridge loan, they're very similar to a standard mortgage. So you're going to, of course, have the additional cost of an appraisal on the departing home to, confirm that equity position, a slightly higher interest rate. We're talking like 0.125% or 1/8%. But beyond that, it's just a traditional mortgage with the traditional costs. So a much lower cost option than some of these cash offers or bridge loan type solutions, and then of course, there's no temporary housing, there's no additional cost there, there's no rushed decisions. So just a fantastic program overall.
Yeah. I recall these same as cash offers or bridge loans. They're typically running about 2% in addition to regular loan fees. This provides a much more affordable option for our clients, and I'm glad we're here talking about it today. Why don't you walk us through the process and what a homeowner should plan for, Saul?
Sure, absolutely. I think, just like anything, pre-planning, having early conversations, setting up a time to talk with myself where we'll sit down, lay out all the numbers, figure out what your options are. You'll come away from that call with perfect clarity and a plan in place in terms of what you need to do and what your options are. We'll then move into a pre-approval stage, help coordinate setting up that home equity line of credit if that's an option, coordinate with you, Tony, as far as aligning, timing and strategy on the purchase of the new home and then the ultimate sale of the departing home. And then, of course, our job isn't done after that. Post-closing, we may have a scenario where you want to maybe take some of the proceeds from the sale of that home and apply it to the new mortgage. Maybe we look at a recast or a refinance. So this all goes into pre-planning all the way to post-closing once you've sold that departing home. But really, we just start with that initial consultation.
Got it. Well, I'm a firm believer in planning and ultimately planning for the worst and striving for the best.
Sure.
As someone working through this process, I would expect 2 to 4 months of carrying 2 payments, but the upside is total certainty on where your next home will be. The important part for planning purposes is to have a realistic expectation of what your home will sell for, thereby making sure the numbers work for you and your finances going forward.
Yeah, that's right.
So, Saul, who's this program best suited for?
Homeowners with a 20% equity position as a starting point.
So what do we do if their equity is marginal? Maybe they're only at an 18% equity position. Can we pre-plan minor updates to bump the home's values, things we might be doing to sell it anyhow, or pay down the loan?
Absolutely. Either option is on the table, and that's all part of that pre-planning consultation that will collaborate with you. Other buyers that are ideal candidates for this program are those who want to avoid the non-contingent offers out in the marketplace. And then, of course, clients with a strong credit and income profile who will be able to qualify once we omit that departing resident's monthly mortgage payment. So those are all our ideal clients for this program.
Omitting that departing resident's payment is huge, and avoiding the need for a contingent offer opens the client up to the other 98% of the sellers whose condition or price don't require a contingent offer to achieve a sale. It really allows them to choose the cream of the crop rather than the bottom of the barrel, as the case be.
That's right, 100%.
What misconceptions do you hear most about these programs?
Initial assumptions that homeowners make. The first one is, I absolutely have to sell first. And that's not necessarily the case. So until you've had the conversation and we've run the numbers, this program is very potentially an option for you. The other misconception or challenge I hear with folks is that they just automatically think that they need to go the bridge loan route. And a lot of them are hesitant to do that due to the cost and the complexity of that option. This program, again, it's a very straightforward, standard, traditional first mortgage. So it's not a second mortgage. It's not going to encumber the lien on both properties, anything like that. So the simplicity is also really nice for homeowners.
We appreciate the fact that you've been able to help our clients recently secure homes before selling their current home. It really made their lives simple. They didn't have to think about the sale of their home. They could focus on making sure they got the right home in the marketplace, made sure it inspected, any other issues they had could get resolved, make their move. Then they're out of the house. All the work gets to get done in preparation when they're not there. So much better. Then staging, presentation to the market, and then showings become quite easy because their life is not being disrupted, ready to cook dinner, and all of a sudden kids are sitting down and someone wants to show the home. The home's vacant, they're out of it, and it's really given them the ability to get top of the market prices as a result of that process. So thank you for helping our clients do that, Saul.
Absolutely. It's been my pleasure. Thank you, Tony.
You bet. If someone thinks they might be a fit for this, what should they do, Saul?
Yeah. So again, I think the first thing that you need to do is schedule a consultation call with me. Let's sit down and run through the numbers. You'll leave that call with perfect clarity and confidence on what your options are and what your next steps are. And then we'll collaborate with you and your team, Tony, on putting together a game plan and get you moving forward.
Great, great. Thank you again, Saul, for coming on today to explain this program. If you'd like to get connected with Saul and I to find out more, send a text to 425-466-1000, and we'll be happy to help. Well, thank you again, Saul. I appreciate you, and we'll talk soon. Take care.
You're welcome. Thank you. Take care.